Well, hello everybody and welcome to your Calgary real estate market update for April. I've got to say that in all the years that I've been doing market updates, this particular month seems to be the month with the most stuff going on in the political spectrum. It just seems like you're looking at the headlines and it's one person saying one thing about another thing. We've got all kinds of craziness happening at all levels here. We've got tariffs coming in. We've got a federal election coming in here. At the end of April, we're hearing about, we're going to be the 51st state. We're seeing cessation talks, all of this noise. It's almost overwhelming when you look at the news here now. And a lot of it is actually clouding some really solid economic fundamentals for Calgary. Okay, so I'm going to try and bring it all back to earth here for you guys in the next few minutes and let you know what I'm seeing that I think you should be paying attention to if you're looking at making a big ticket purchase or sale in Calgary. So the Calgary Real Estate Board is keying in on this uncertainty messaging that's weighing on the housing market and drawing down sales. And it has been. We've got 20% or 18.8% less sales in the month of March. This is March's data set than we had last year. So that's down, and the year-over-year numbers are down as well, the year-to-date rather. So the first quarter is down about the same amount compared to what we were in the Q1 of 2024. And the listings are up to a lot more supply coming in there. Business leaders with all this uncertainty, okay, when you're talking about these, crazy topics, elections, cessation, 51st state, all these different things that could be happening, they're feeling that, there's some concern we could slide into a recession, that it might not be good news for the economy, okay? So the economy is like not a lot of news, not a lot of craziness, steady Eddie things, so capital can be invested with the expectation of a reasonable return and not a lot of risk factors. All right, we don't have that right now because we have a whole lot of this happening up at the top. Okay, so a few things to watch out for, and it's hitting the new home build space as well. So this is Brian Hand, Chief Executive Officer of the Build Calgary region. He's saying Calgary scores second best of all the major metropolitan areas and remains one of the most affordable. A fantastic piece of news and a sign of confidence for the new construction space in our real estate market. But this uncertainty is jeopardizing our overall record. Now, this comes from a data or an analysis that was done by the Canadian Home Builders Association, where they look at all the cities in Canada, and they're trying to see which ones are doing the best in terms of making it easy and cheap for developers to do their business there. And there's some really interesting things about Calgary that came out of this. But the overall takeaways, there are a whole bunch of them, but there's three in there that I think would be relevant for our audience here. The first one is it's Calgary, Edmonton, and Durham, Ontario were the top destinations for young people living in Canada between 2021 and 2023. Okay, that's a great accolade to have for Calgary. And the second one is that the 2022 to future 2031 time period is on track to be the decade with the fewest homes built per new persons added to the population. A really interesting stat there that really drives to the simple concept of supply versus demand that we've had at least since 1972. So that's interesting to see. More on that in a few slides here. And then the third one that I want to share with you is that municipalities that rank the lowest in terms of a development, all right? So adding the more homes per new person's added also tend to have the worst housing outcomes, okay? And housing outcomes are the types of real estate that's being built. So whether it's affordable housing or whether it's assisted living or retirement living, a whole bunch of different things need to be made to have a balanced form or balanced sense or a balance of product to bring to the market for real estate consumers. You want those good housing outcomes so that you can trade up and you've got some upward mobility through housing classes here. That's what we're looking to have with good housing outcomes. So we'll see this in a few minutes or a few slides. Okay, so this is a cool slide. Again, it shows Calgary doing really, really well, ranking tops of the list by far in terms of change in population from net migration for those aged 25 to 44, 9.9%. That's fantastic change in population here for last year. This is all based on Statistics Canada's data sets. Okay, so pay attention to this stuff. All right. This is what really matters, not so much the crazy headlines that are designed to keep your eyeballs on articles. Okay. This is the real stuff, and Calgary is in really great shape here, guys. So if you're thinking about making a big ticket purchase, you can do so with confidence, in my view, because the numbers are looking really good for us. Okay. So here's one: the gap between housing starts and population growth indexed to that city's long run average. All right. So Calgary is topping the list for we're growing faster than our historical average. Okay. So we're attracting all these young people, and then we're building houses to support them as much as we can. But there's more people wanting to move to our city because we're so affordable and we've got so much opportunity that we just can't build enough. Okay. And that's what this graph is showing us here. So again, the demand for your real estate is going to be there in the years to come. And so you can invest with confidence and take advantage of this window of opportunity we have within our market. So here's a graph that kind of shows the housing outcomes versus this benchmarking index. And again, shows Calgary as doing very, very well in this respect, along with Edmonton, that's way out front for this particular stat. So we're doing a great job of not only building real estate, but building the right ranges and types of real estate here in Calgary. So I think this is a subtle thumbs up to the City of Calgary administration and the good work that they're doing quietly behind the scenes, while City Council is taking all the flack for stuff that's not going right in our city. There are good people that are working in there to allow us to develop and grow in a responsible way. So I like this graph, and I like the work that they're doing. One little piece of actionable information that we did see this month is that the Bank of Canada says they would have held interest rates at 3% in March if not for the tariff threats. And so what this means is that we may see further drops in interest rates as a result of these tariff threats. And if it gets Tim Mecklem, whom you see pictured here, to the governor of the Bank of Canada, to reduce the interest rates more so than they would have thought that they would more so than they would have planned to do, then we might see a window where interest rates are so low that it makes sense to lock in at a fixed rate if they're overdoing it to adjust for these tariffs. So we'll see about that here in the months to come. I've typically been a staunch supporter of variable rate products for your loans, but this is something to watch here in case we dip down just a bit too much. Okay, the provincial housing market outlook, as housing is on a shaky foundation amid tariff turbulence. So this is a report put out here by TD. And one of the things that's leading me to believe that we might not see as much tariff talk here in the months to come is because it's not going well for the American economy with all of this flip-flopping and announcements and Trump saying stuff from the White House. So this graph here shows how the market has responded in the first 200 days of each of the last 4 presidents. Okay, so you got Trump in here for his second term, and he's taken a nosedive in recent days here. You can see he was starting off not too badly, still not as good as Biden, the president he's replaced, who did very well after that, or the economy did very well after that. Trump is now nosediving, all right, and it's because companies and the markets do not like uncertainty. They don't like things flopping back and forth and mixed messaging, and there's just been too much of that from the White House. And so people are pulling their capital back. They're not doing deals. They're holding their cards close to their chest or sitting on their money, and that's drawing the overall economy down here, okay? And so all of the donors that donate money to the Republican Party and these other political analysts and institutions and everything that's sort of tied in to support the apparatus down there, they're going to be saying, hey, look, we're not making money right now. This is not good. And that is the type of thing that can change policy at the top. Okay, so let's be interesting to watch and see what happens here, and if this trend happens and continues, and what happens with all these tariff threats. All right, some good news about our local market now is that we received $23 million in federal funding for exceeding our housing targets. Okay, so this is the Housing Accelerator Fund that we've mentioned on the channel previously, whereby the federal government was saying, look, we're going to give municipalities money if they build more homes, if they accelerate the amount of homes that they're planning on building. And so Calgary has accomplished that and now has $23 million more money than it would have had if it didn't accelerate the development. Okay, so some of the reasons that we're seeing, blanket rezoning and reducing the time that it takes to get certain permits through is so that we can pick up this free money that's out there to be had. Okay, so this is a good news story, and I would hope that we would see more of this funding in the years to come. We're also getting an $800 million investment into cancer training and technology. This will happen near the Foothills Hospital. And I'm a big believer that if you're a real estate investor, as I know many of our viewers are, that you invest in areas where other people are going to be investing money to improve your location. And so $800 million to create more jobs and more infrastructure around the Foothills Hospital means anybody within a few kilometers of the Foothills Hospital or within a few minutes of the Foothills Hospital is going to see a bit of a benefit from that over the long term. So really good news there. We talk about this being a window of opportunity. Well, now this is starting to make the press too, and finally a good news story there. So millennials and Gen Z are in this Goldilocks moment where there's uncertainty within the market, where there's more supply, where prices are not increasing so dramatically. Interest rates are also coming down, creating this Goldilocks moment to go and jump into things, okay? So if you're a buyer on the outside looking in, you need to be talking to your professionals, your mortgage broker and your real estate agents to get you out there and help you buy a house so that you can get into the property ladder, because we will see another boom market here. I am sure of that. All right, so let's talk about the stats now. Again, some of the sales stats, enough about the news. Last month, prices were $587,600. This month, we're up just a hair here to $592,500, barely coming up at all. And if you look at this graph, you can see we're starting now to see pricing come up. So way over here on the right-hand side of the graph, starting to come up to match about where we were this time last year. All right, we gave up a bunch of our equity that we had over the winter months. Now we're right back about to where we were before, but still not seeing sales coming up to the same effect that we might have expected them to. Okay, so we're going to have a slower start to the year this year than we had last year. All right, last year we came out of the gate super hot in January. You can see prices just took off here. All right, we got started almost a little bit too early, and then we had a bit of a hangover through the late summer and into the fall and winter months, and now we're getting a bit of a slower start to things. So I think while last year the story was we're getting, or a market is starting really hot really soon, I think this year it's going to be a little bit of a later start for us, and we'll have to see if it carries on into the late summer and early fall months. In terms of balance within the market, we are still in a balanced market right now, okay? Almost a textbook balanced market at 2.5 months worth of supply, where it has been since last fall, okay? So we never really stayed, or never really dove strongly into buyer's market territory. As soon as we hit that balanced market, we've largely stayed there and kind of bounced around for the last few months. And this is a great place for a real estate market to be. We're going to appreciate somewhere in the low single digits range, in that 3 to 6% range is I think where we're going to be with balanced market conditions. You can build a future based on those numbers. You can buy a property with conditions and have a chance to do your due diligence. You can see a few places. If you're a seller, you can have the reasonable expectation you're going to get a good price relatively quickly for your property, and you'll make enough money to be able to trade up into your next one in a few years' time. So a great place for everybody to be within the market right now. I'm excited for the spring market. I'm excited for the weather to change, and I'm excited to have an awesome year here in 2025 out there with you guys. So thank you very much for watching here. Again, if you need some support in buying or selling a property, please check us out here at Redline Real Estate. Thanks again for watching, and we'll see you next month.